What does he know? Arthur Hayes, over the last several interviews, has been pointing to one clear signal that he's waiting for to identify when Bitcoin is ready to surge back towards the upside. He says that this is always bound to happen eventually and that it's never failed him in the past. And in this video, I'm going to tell you what that signal is. When does he think it will happen? And what does that mean for Bitcoin prices? So if you're excited to find out what the signal is, throw a like down below and let's get into it. Now, guys, Arthur Hayes is pointing to one clear signal that we have got to wait for in order to know when Bitcoin is going to make that next move, and probably the rest of the crypto and altcoin market. We can get there through a number of ways, and this is what we're going to go over here before we get to the ultimate catalyst that's going to get us where we want to be. It could be any number of things, but ultimately, we'll just have to wait and see. It's why we're just waiting for the signal to arrive. So one of the catalysts that could get us there is the Iran war. As you know, the US is at war with Iran, and there could be any number of results from that. We could see oil surge and Bitcoin falls. We could see a prolonged conflict drawn out. Maybe some other countries get involved, and then that creates a shock and the market falls. Or maybe crypto reacts positively to the news. I got a clip from Arthur on this. Check it out.
Crypto looks forward and says the longer this war goes on, the more money is printed and rallies, even if equities fall. Or crypto gets spanked like equities, US equities in particular, as people degross their entire portfolio. It's like, okay, war is bad. I don't know what's going to happen. Obviously, this is going on longer than they told me it was. So let me just sell everything and sit in cash, right? And everything means S&P, NASDAQ, Bitcoin, right? You sell it all.
And so those are two of the possible catalysts. Maybe Bitcoin rises, maybe Bitcoin falls, maybe the uncertainty of the war just causes the entire market to sell off. If you can look at this chart, stocks struggle when uncertainty rises, and the same is true for crypto as well. If you've been paying attention to markets lately, you've seen that this conflict and some of the other conflicts that we've seen have created shaky ground for crypto and really the rest of the market. You can see here that as the economic policy uncertainty index rises, S&P 500 tends to fall down when economic policy uncertainty rises. Now, I know this only goes to 2020, but it's definitely proven true over the last 5 years. If you just think back to when we've had that uncertainty, when Trump came out with the tariffs, when we came and went and kidnapped whoever in Venezuela, these are things that cause the market to sell off, at least temporarily, while uncertainty is high. And ultimately, this is something that will lead us to the signal that he's talking about. But there's another way we could get there. Maybe there's a collapse in one of the financial institutions. Maybe there's a collapse somewhere else in the market that creates the catalyst that we need. And so Arthur goes over this possible signal in this clip here. Have a listen.
The signal is, the regional bank index is, down 45%. There's banks that are getting smoked, 15, 20% every session in the United States. That's the signal. That's when they have to step in. That's when they have the political cover to do whatever they want, which is to print a lot of money, because the politicians are going to be crying for it.
So maybe at this point, you're already picking up what the signal is. They have to come in and print a lot of money. We're in crypto, and we're always concerned about liquidity. How much money is in the system? I know that Bitcoin hasn't exactly tracked with the global M2 this year. That's something that a lot of people were talking about, but crypto is still a very liquidity sensitive asset. But don't take my word for it. I've got Michael Howell here from Cross Border Cap. He's the godfather of liquidity. He authored much of the liquidity research that we do our work on. Have a listen to his thoughts on crypto and liquidity.
But I think generally speaking, the whole crypto universe is much more likely overall influenced by the liquidity cycle. And if the liquidity cycle turns down, I'm not going to put my hand up and say that I think that Bitcoin or crypto are going to be strong performers this year, because I don't think they will be.
So you've got Arthur Hayes telling us that liquidity could be a signal to look for in terms of Bitcoin going higher. You got Michael Howell telling us that crypto is unlikely to perform well unless there's liquidity. So can you guess what the true signal is? The true moment that Arthur Hayes has been sitting back and waiting for. He's looking at the charts, he's looking at the data, he's looking for news. What do we think that signal is? Let's find out what it is.
So in the event that we're all looking for, which is a reflation trade of a massive money printing event, it's always political. The Fed will always come around to save the system.
The Fed will always come around to save the system. And that's the key. That's the secret. That is what we're waiting for. That's what he's waiting for. Personally, that's what I'm waiting for. We're waiting for that massive surge of liquidity when the Fed comes in to save the system. Does it save the system from war? Does it save the system from banks collapsing? Does it save the system from, I don't know, you tell me. As long as it needs saving, the Fed will come in to save it. And this is what I mean when I say that this always happens and that it's never failed him in the past. Let's go across to TradingView and figure out just how this has treated us in the past. So the Fed has implemented massive monetary stimulus from time to time. They've done it about 5 times in the last 15 years or so, 17 years or so. So let's go back to the first instance. And this is before the inception of Bitcoin. So we're going to use gold as a, kind of as a proxy for Bitcoin to see what it does to another monetary inflation hedge. So you've got the Fed announces QE1. We see in this blue line here, this is Fed net liquidity. So this is the Fed balance sheet minus the Treasury General account minus the reverse repo. And so this is telling you how much money is in the Fed here. In blue, we got Bitcoin in orange, hence the orange hoodie. So QE1, Fed balance sheet goes crazy, and Bitcoin as a result tracks pretty nicely up in there. We've also got the Fed announcing QE2. A short while later, we see a surge in liquidity. We see a surge in Bitcoin price. Now, in comes Bitcoin. Bitcoin is now in the trade. Remember when Bitcoin was, I don't know, a very low price? Would have been nice to get in there, wouldn't it? Anyways, right. So we've got the Fed announcing QE3. Massive surge in Fed liquidity, solid surge in Bitcoin. QE, this is the COVID QE. If you were back in the last cycle, when the Fed came in and injected a ton of money, Bitcoin and altcoins went absolutely crazy. And this is it right here. This is to stop the world from collapsing. And as a result, Bitcoin went crazy. Now we have this here. And this is something to notice because you have the Fed announcing, so this is RMP, Reserve Management Purchases. This is the Fed's new fancy word for QE. The acronym department at the Fed was working overtime. They didn't want to get stuck doing QE again. QE is bad. It's a bad thing now. We'll call it Reserve Management Purchases. And we're supposed to think that that's somehow different. It is different in one sense. I want to take you across here quickly. Now, this is a breakdown of all the different QEs and how much money they did. QE1, 600 billion. QE2, 600 billion. QE3, 40 billion a month in mortgage buybacks, later expanded to 85 billion. Okay. Then you've got QE4, this is COVID QE, 700 billion. This is QE5, Reserve Management Purchases, and this is 40 billion a month in short-term T-bills. So they're not buying mortgage-backed securities. They're not buying assets off the open market. They're doing this basically just to keep reserves flat. So this is what Michael Howell says. I could pull the clip for you, but I'm sure you're probably sick of all the clips. But if you appreciate all the clips that I bring you and all the research that goes into these videos, give me a subscribe down below. It means more to me than you know. So that being said, we've got a 40 billion a month. That is the lowest of all the QEs. And as Mike Howell has said, this is really just enough to kind of keep the tempo of liquidity. It's not going to create a surge, and it's probably not going to create a sharp move downwards, even though obviously we did see a sharp move downwards. But you could say that this is because of, Jane Street or October 10th event or whatever it is. Maybe it was just they didn't print enough money. But really what I'm trying to say here is that this QE, Reserve Management Purchase, is a little bit different. And so this is why Arthur is still waiting for the signal. He's waiting for the move. It hasn't happened yet. Yeah, we're in QE5, technically, Reserve Management Purchases, whatever, but they're not really printing money like they did in the past. So once we need saving, that is when the Fed comes in, the money gets printed. We don't care what the political ramifications are because the CEOs and the politicians and everybody and their grandma wants the Fed to print money. Right now, nobody wants the Fed to print money. They say, don't print any money, you're debasing our purchasing power until we get a problem. And then they say, print the money. Go ahead and print. And so that is the moment we're waiting for. That is the signal, and that is the trade that Arthur Hayes claims has never failed him in the past. And if we're looking at these charts, I'd say he's right. So I hope this makes sense for you. I hope you are also waiting for the signal like me and like Arthur Hayes, and honestly, probably like the rest of the sophisticated investor community. Liquidity drives the crypto market, and that's something I think we just have to accept. I could be wrong, but so far, that has proved to be right. And so if you appreciate all of our efforts, go ahead and give me a subscribe down below. Also, leave me a comment. Let me know if you've learned anything. Do you think that we're waiting for the Fed to save us, or is there another catalyst that is going to bring us home? In either case, Thank you for being here. We'll see you in the next video.